right, so welcome to Game Plan Sunday. Today is July 11, and I'm here with the gang. Y'all know how we do. We're going to take a look at what occurred over the past week. In this case, it's going to be 2 weeks because we're coming off of the 4th of July holiday weekend as well, which we didn't do a session. So kind of want to catch up a little bit on that as well. But then we also take a look at what's coming down the pipeline coming to this week. Overall, the week going into the holiday for July 4th was crazy in the markets for us. And here at Wallstreet Jackboyz in the trading room, we had lots of great plays. I think everybody racked up over the weekend pretty nicely, which you should have. You know, all the plays was in the chat was crazy. And then this past week, a little more interesting, not as great, but, we still held it down. But a lot of the pressure that we had was coming off of, OPEC with the oil situation. And, we already had some plays that was, in the making for that. So I did get chopped up in that. But, it is what it is, right? So you have to be able to cut those losses quickly when you do suffer those. So, but that's where a lot of the pressure came from. And we saw a lot of different, we've seen a lot of mixed news in the bond markets right now. So the bond market's sending a lot of head fakes. We're still in an environment that is completely confused. I'll give you guys the example every week about the ant. When I used to play with the ants when I was a kid studying them, and when they lose their direction, nobody knows where they go. Eventually, the economy is going to get back to that equilibrium state. But right now, everything is out of whack. Even on the foreign time, in the foreign markets, we're seeing some, interesting developments over there as well. But overall, the theme still continues to be the same for me. And just taking a look right here in the ISM numbers, just taking it back to the manufacturing numbers that we had, right? This is right here on the website, so you guys can check that out. But just click here. This is the manufacturing side. This is what they're saying. First respondent was saying that, let me switch this to red. All right. Supply chain constraints, okay? From mechanical to electronics continue to be challenging from both availability and logistics perspectives. Inflationary pressure on materials due to supply and demand imbalance. I just told you guys about things that are really imbalanced right now. We're still seeing that, still playing out. And all of this is inflationary. See the terms they're saying? Inflationary. Now, remember, we've been talking about this since the beginning of the year. Now we're living in it. So now you hear people talking about it. And remember, the Feds were saying it wasn't going to be no inflation. Now, all of a sudden, inflation is reared its ugly head. Inflation is transitory. But we're not seeing anything transitory about this inflation. And in fact, there was a headline that came out with the IMF stating that, the timeline that they was talking about transitory, like we may have sustained inflation. Okay, so this is all the stuff that we were talking about anyway. So you can see here on the next one. Continue to see very strong demand across all business units. In many cases, we are limited on our ability to supply by raw materials availability. They don't have enough. Okay, they don't have enough supply. They have demand. People are shopping. People want to buy. And remember, I told you before, people don't want money. People want what money can buy, goods and services. Goods and services is overall, okay? So when you don't have that, you're having issues. He said it's still running at record volume, but could be producing much more. Even if we were able to get all the materials needed, we will have capacity issues on many of our production units. Manpower has been a concern. That's been the whole gist of this whole economy this entire year, for this entire summer, is that, they don't have enough help. A lot of these, companies don't have enough help. A lot of people are not in the workforce. We still have millions of people that's still not in the workforce, okay? Some people just completely just gave up, okay? Anyhow, we can see on the next one, chip shortage. Okay, so shortages. All right, next one, higher costs are starting to be passed along to customers. This is what we mean by when you go in to buy these goods and services, they're going to be more expensive. So how do you beat that, right? How do you beat inflation? We've been talking about it coming, ahead of the markets, but like, how do you get ahead of these higher costs? Well, what you do is you buy all the things that you're going to need and that that you're going to use, real goods and services in advance. You stockpile up on them so that you could evade the higher costs coming in the future. And so you're getting it now because you're going to need it in the future. But because higher prices are coming, you go and get it now. Okay. This also causes prices to get bid up as well. Once everybody figures that out, everybody will start to do the same thing, and that will cause the price to rise. This is what I was telling you guys about Weimar Germany, hyperinflation. History is a good teacher, okay? If you go back in history, you see these things, there are different dynamics, but we can learn so much from history. And we saw that in the situation, that's what caused hyperinflation in Weimar Germany, okay? People was trying to go ahead and spend the money before the prices changed again. And once that mentality gets adopted across the nation, you're definitely going to get hyperinflation. So, but we'll see. Right now, it looks like stagflation across the economy right now. So we'll see though. Next one, oil prices have continued to steadily rise. Oil prices steadily rise, okay? Oil got smacked up last week, but overall the price is still super high, still above $70 a barrel. And my target was $80 on that. So we'll take a look at the oil charts here later as well. Next one, global supply chain issues, okay? More supply issues. Other than material availability, volatility, and rising prices. Those three different variables that this producer here mentioned, availability, volatility, and rising prices. The outlook for our company is good. We can't keep up with the increase in orders and have projects that may require a second shift to be added temporarily. So they're trying to, beef up their work power. The thing is that they have issues with trying to hire people to meet the demand of the people in the economy, right? So again, this is what happens when we have all this intervention in the market. So when the government intervenes, call themselves trying to save it, they patch up one hole of water that's sprouting from the ground, and then three other holes over here start sprouting water from the ground. Now you're like an octopus, you're running out of arms. And that's what we're seeing in this thing here, okay? Anyhow, the next one said customer demand remains strong. Supply chain issues continue to hamper materials availability and impact production scheduling, okay? More of the same news. Higher prices, inflation, and lack of available labor are impacting all organizations in our supply chain. Same thing. Supply disruption continues with no end in sight. Check out the tone in this, okay? This guy's in the non-metallic mineral products. He says supply disruptions continue with no end in sight, exclamation point, all right? This is like dire, okay? This last one here says we continue to be oversold based on what we are currently capable of producing. A lack of labor is killing us. Now, why is it that there's a lack of labor? Because of the government's intervention. We're paying out this crazy unemployment, and it does not create growth. This is inflation. The economy is not growing, but it gives them the ability in short term to have a bragging right that the economy is growing and things are so great, because you see the short-term benefits, but it's not sustainable and it cannot be sustained. And this is the issue with these interventionist policies that we get from our, central banks and federal government. And then we have those unemployment weekly claims. They pretty still much around the same. They started to make an uptick into the wrong direction. And so we'll just skip some of this here, but you guys can actually check it out in here with the employment. Those numbers, it's still nothing substantial that's happening there. In fact, we're starting to see those numbers go the wrong way, which makes things interesting right now. With all the support from the government, we should see jobs coming, but instead, no, people are picking and choosing right now. But what they're hoping is that since they're pulling back, they want to take the punch bowl away to try to get you to sober up. But what they don't know is how people are going to behave with this. And so we got a couple of deadlines coming up this month. And at the end of this month, starting the end of this end of this month, coming into the fall season, where I think the economy is, the markets are on a hill about it. We're trying to interpret it because we got a couple of different things that are supposed to be coming out. For one, the end of this month supposed to be the eviction moratorium supposed to kick in last day of the month, so August. So there's supposed to be people being evicted, put out in the streets. I personally just can't see Biden or the Democrats allowing that to happen because, he's going to get ate up about it. And that's just not how the Democrats' platform works. If anything, they want to be able to support as much and as long as possible. If it was Republican, it's a little different. I can see them letting it happen and they'll deal with the heat. But I can't see the Democrats dealing with this But like Topaz says, get the popcorn ready because, hey, when people start getting evicted, it's going to be crazy. Now, the issue is from the Fed meeting this past week, we saw concerns between the Fed, the Fed governors about pulling out of the mortgage-backed securities because house prices are out of this world right now. Okay, we got people just bidding way above the bid price of these homes, and it's pricing first-time home buyers out of the market. And a lot of that comes from the Fed's intervention in the first place. You got to understand, these low interest rates and all this stuff, it's, I don't even know how to say it. It's crazy because if you haven't studied, you wouldn't understand it, right? And so some people look at, those out there like myself that's calling the books and telling you what's happening, probably call you crazy. But in reality it's very convoluted. A lot of people don't understand it. I'm still learning. I got to say, there's so much going on. We're all learning this in real time as well. But the good thing is that I study a lot of history, so I do have some good insight. But the past is no indication of what's going to happen in the future. But we got a pretty good idea of where this thing could go, okay? But with the Feds supposed to be pulling out, which I don't think they're going to do, but we saw that in the Fed meeting this week. We saw the markets sell off from this because it sounds like they're going to be trying to tighten. And the tightening is supposed to happen next year, the end of next year, to 2023. This is what the Fed's been telling people. And so the market's supposed to be adopting this mentality. However, we're not seeing that. We're seeing, these guys out here saying that they believe that the Feds are going to be forced to capitulate by the end of this year. So the markets is trying to move ahead, these moves, okay? Especially the bond market, okay? So you're looking at the bond market, they're the oracles, they're forecasting, okay? And I've been to several trading groups in my life. Nobody's ever taught me about the bond market. These are things that I learned on my own. I've been teaching you guys. We got a time in the markets class that's here. When you get the options trading master class, you get the time in the markets class for free. It's teaching you about all the things I'm talking about now. So if you were a little confused, if you are a member, just go to the time in the markets class. You'll pick up game on inflation, interest rates, bonds, and all of that. So you can get a little nice primer there, and it's free. Okay. Yeah, good. Yeah, Ron said Wells Fargo shutting down credit accounts. Yeah, that is very, very interesting. The Wells Fargo shutting down credit accounts, and that's really going to negatively impact people's credits. Now, we had the consumer credit data that came out last week also. I didn't post it here, but that was really concerning. We have a record amount of new debt, and the consumers are strapped so heavily in debt right now. Like, this cannot end well. This is the problem when the Feds get in and intervene. But at the end of the day, capitalism is going to get the blame. But most people, they don't teach capitalism in schools these days. Everybody's pure socialist. So it's just mind-boggling because, if they drop, interest rates so low, market participants are going to take advantage of that debt. Okay, that's what they're going to do, right? That's when you're supposed to borrow when it's cheap. And so they're trying to stimulate the economy, but what's happening? They're creating all kind of wealth inequalities, income inequalities, things that they complain about. It is because of the government's intervention. I mean, point blank, period. I'm telling you, like, this is what the inflationists do. They continue to kick the can down the road. And they've done it in the past so many times that they don't think that, they don't really think about the consequences, because a lot of these guys are politicians and they're in positions that are only for a couple of years. So long as they can keep the story going while they're in there, so they can have a good report card, they're good. Let the next man come in and let them deal with the drama, That's what their hopes are. But unlike the Great Depression of the 30s, or the inflationary period in the 70s, or any other time in history, you guys got to understand, interest rates are at freaking zero. So ain't nothing that they can actually really do. They're going to continue to try to support. So I think this is where the market's probably, is going nuts right now. We had some people that was in the chat room that was asking about it. And again, that's why I say check out the primer of the class in there so that you can get a little insight on that. It's free for all the members, of course. But just the whole thing here is crazy. We're looking at insanity taking place in the markets on a daily basis. That's why when I see a lot of insanity, a lot of the long-term plays can get you chopped up. And like the Bitcoin boys say, if you ain't got no diamond hands, you got some weak pussy ass hands, you're gonna get drilled, okay? So I've been focused more short term in this choppy ass market. The market doesn't have a clear direction. Everybody's guessing about what the Feds is talking about, thinking about doing, when sometime in the future. Like, it's just crazy right now, okay? So not just myself, but legends are telling you they staying the fuck out of here. It's crazy. Jim Rogers and all these guys, they're like, oh, nah, I can't deal with this, you know? So you talking about guys, managing billion-dollar portfolios don't even want no parts of this right now. So again, if you're chilling, that's fine, no problem. But learn by looking in the markets. I know a lot of people take a bunch of classes and stuff like that. Listen, classes are not going to prepare you for what's taking place in the market. You need to see it to understand this. I've been doing this for years and never seen anything like this. This is crazy. And so fortunately, because you're here, you're learning, okay? Like you're just seeing it. And we have to navigate through this to generate profits. That's what we're trying to do every day, right? Sometimes you get your head cracked. Like Topaz says, you got to go and take a nap. I had to go take a nap this past week because oil did me dirty, But yeah, we're all in this together. So just know that you're not alone and you got a community that, real traders, we're out here doing our thing. And so definitely, man, just participate. I appreciate you guys helping out with that. Let's see what let me see before I get the Topaz profile here. Time to increase oil production. OPEC and its allies are unable to decide. That's what happened with the oil situation. Anybody that was wondering about that right here is on the news feed. OPEC, not able to make a decision, and oil just reversed. It was stupid. It was a lot of overselling, but at the same time, I think it was probably one of those things where the markets, the participants in the oil markets are looking to go ahead and take profits right now. They just, you got to take some off the top. When you get so extended, you got to take some off the top just in case, the thing reverses on you. So I think that's what we're seeing. But overall, I believe we'll continue to move higher with that. Topaz come through with Congress considers credit reporting overhaul, including putting government in charge of scores. This is what we're talking about when this road to serfdom, where central planners want to hijack the economy. Understand the economy is made up of participants, you and I, all of us. We are the judge. You can't have somebody saying that this is right or this is wrong or this, that, and the third. No, everybody collectively, our decisions is based on what we buy. We are the judge. We judge who wins. You don't like a company, don't buy from them. Simple as that. If you like them, you buy from them, right? And so that's how the winners are chosen. Okay, that's how the losers are chosen in the free market. But when you have government intervention, they come in and start regulating, saying this person can't do this and this, it distorts everything, man. But you got to be careful because they're trying to hijack this entire economy. That's why you see all these meetings with the G20. You saw the World Economic Forum. We see all these global leaders coming together, trying to figure out how to hijack the economy. What that means is that there's not going to be any more freedom, no choice. I'll tell you guys this quick scenario because I ain't gonna talk your head up. Y'all know how I do. I told y'all this was the year that COVID broke, last year. Okay, Mark Cuban. This is what Mark Cuban said. Now, he said, we got to get people to spend the money. So what the Fed should do is create accounts for every person directly, skipping the banks. All right, forget the banks. Everybody plug to the Fed. Everybody gets stimulus money come straight to you. Okay, most people are like, oh hell yeah, I'll do that. Yeah. But then he goes to say, create a reward and consequence system with it, and that'll change people's behavior and it'll force people to spend the money the way that you want them to spend the money. Now, this is not freedom. You got to understand, this is not freedom. This is the stuff that all the economists from back in the day been talking about, trying to take place in real life, okay? Because they are trying to create inflation. But do we really need more inflation? No. But this is what they're doing. This is the fallacy of the statisticians. Okay, they're just judging off of numbers. All right. But when you go to the grocery store, you go all these places, it is too high. When you're in the market trying to buy a home, it is too high. Okay. But they are trying to create more of that, which is crazy. So anyway, he was saying that if people don't spend the money in a certain time frame, take it back from them. So you imagine they give you a stimulus check, whatever these stimulus things. $1,500 or $25, whatever it is, and you got 3 days to spend the money. What you gonna do? You're gonna spend the money. All right. They send me a card with it. I'm gonna spend the money because I got 3 days to spend. What I'm gonna do? So then it causes everybody to go in the market, start spending money. Prices, everything start to go up. Inflation starts to go crazy. This is what they want to create. I'm telling you, because they don't believe they see any inflation. Look, according to the PCE and the CPI numbers, they're not able to hit this target. They're trying to do a long-term target, stuff like that. And inflation is over 4%, 5% right now. And remember when this whole thing kicked, oh, there's no inflation. Okay. All right. Now we're seeing it come out in the real world. We've been on it from day one. So anyhow, mortgage servicers brace for fallout as COVID bailout comes to an end. This is what I was just talking about earlier. The nation's mortgage servicers are gearing up for the biggest wave of delinquent loans since the subprime mortgage crisis. But they said that they are ready. Yeah, these banks, they are getting ready. Just like Ron was just talking about Wells Fargo, cutting off a whole credit lines and everything, right? That's that's interesting, man. That's real interesting. Popcorn ready to see how this way. That's not the only thing. The unemployment benefits the COVID unemployment benefits are supposed to be coming to an end, I believe, September. Oh man, that's gonna be crazy to see if they allow that to happen. The economy can't even stand on its own 2 feet right now. You're gonna take away, the heroin from all these heroin addicts. Everybody's hooked. Everybody's hooked on all the stimmy checks. You can't just take that away and not expect negative consequences. So this is what's so tricky about this. When we're looking at the bond market, so I'm gonna pull that out here for you guys in a second. When we're taking a look at the interpretation of what we're seeing in the market, it's still really confusing because it's like, why? It don't make any sense. Let me just pull that up real quick. All right. Topaz says it's about to be real in these streets during the holidays. Now, they always going to try to, keep everybody happy during the holidays. That's the federal holidays and government scheme stuff. Even Trump was talking about when he was president, like, we got to get people money for the holidays, right? It's going to be interesting to see what they're going to do. But I believe this month anyway. So they're supposed to be taking away the unemployment, and but Biden and them supposed to came through with some kind of a child tax credit thing. So I guess people with children are going to get money for X amount of weeks. I don't know all the details, but it's a shift of where they're allocating the resources, the money, and it's really convoluted because it's still supposed to be stimulus. But it can't be stimulus if it's not stimulating the economy. And we're looking at the economy is not actually moving up. So, this was interesting. So when we're taking a look at the yields here, short-term yields, gray line, that's what the Fed's controlling. Other lines here is the free market, the markets, I should say. They're the participants in the market. And when we get from the bond market, when you see it go up, this is normally their insight of them forecasting the economy to go up. So we're looking at growth. When you see the yields go down, this is the bond market forecasting that the economy is going to slow down. All right. So that's interesting, right? Because with all the stimulus and you telling me there's no more growth, okay, then we have a stagnating economy. So this is what I was telling you guys before, history is a great teacher. And when you take a look at what is a depression, okay, a depression is depressive because nothing that the feds do, all the stimulus that they do, it cannot create growth, okay? So if it puts a bunch of money in there, boom, 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 it's supposed to make this thing go up. It drop interest rates low, all the stimulus, all this is supposed to drop up. But when you get boom, that goes down, when they're adding all this money and all this other stuff that's in the system, it's not going to do what they need for it to do. Okay. Now they've been debating about whole inflation situation past, was it last month where they finally start talking about, we need to start talking about tapering the economy. Now their whole idea is that they're going to actually start tapering the mortgage backed securities, which I think they're doing like $40 billion. They got like $80 billion for treasuries that they are, doing quantitative easing on. And then the mortgage-backed security. So they're supposed to be pulling back on that. And that's what the whole debate is. That's what you guys are going to be hearing about these next couple of weeks from all the, economic whizzes out there. And we're going to actually have to see in real time what's actually going to take place. Are they actually going to do this thing that they are saying? The market is moving based off of what they think is going to happen, but the markets could be wrong. So this is why this is a very confusing time right now. All right. So anyway, that's the yield curve, and that's on the website. Let's actually get through this a little bit here. I showed you guys the oil stuff here. We go supermarkets are stockpiling inventory as food costs rise. What I tell you guys in the intro? How do you get ahead of inflation? You buy it all now, right? Because pricing is not going to get any better. So you need to go ahead and take advantage of goods and services that you know you're going to use. Go ahead and get it now, because this is like your couponing, right? Because you buying as you go, you're going to get ate up every step of the way. All right. And okay, Ron came through with a headline: 3 killed in oil gas pipeline explosion in Iran. All right, stocks. Okay, Terry always come through. So shout out to the OG Terry in the building. He always coming through, hitting y'all with those morning briefs. I appreciate it, Terry. I appreciate you coming through with those. This is what I was telling you guys earlier about the IMF chief sees risk of sustained rise in U.S. inflation. Come on now. Powell said it was transitory. Now, Georgieva over here saying that it's sustained. Which one is it? Who do you believe? All right. Fed debated how to begin pulling back on stimulus at June meeting. That's what I was telling you guys earlier. They had a debate, about what to do with this, man. Okay. FOMC minutes show Fed ready to taper earlier than anticipated. This is what everybody's gambling on, that the Feds are going to taper. But as my man Peter Schiff says, if you have a headache and the handgun is your only aspirin, are you going to use it? So this is why you have, a lot of, big players and economists like himself that's saying that the Feds, they can't pull the trigger. They're telling you that they are, but they can't and they won't. So, and then, money's been bet on that as well. So Fed officials kept the patient tone in terms of tightening monetary policy. Yeah, we already saw that. Nothing new there. Okay. We've seen the yields. Y'all just saw those yields going lower. All right. What else? Okay, let me actually just go over the service PMI numbers real quick, and then we get to some charts. All right. This is what they said on the service side. I showed you guys the manufacturing side earlier. This is the service side. Okay, this came out this week. Manufacturing numbers came out prior. Okay, so pay attention. Even down here, the numbers here, remember anything that's above 50 is economic growth. This is like this is what we call a leading indicator. Okay, some economic data that comes out as a lagger. We're looking at past data. This right here gives you insight of what to expect in the future. So like I was just telling you guys about the manufacturing PMI, like that's telling you what's more of that to come. Hasn't happened yet, because these are the guys that's on the front line, understand? And they're telling you straight from their fucking mouth what's happening, all right? So anyway, so anything above 50 is inflationary, basically, showing that this stuff is still coming in hot. So we got a 60.1 reading from here. It's a little slower though from the previous month. It was 64. We've seen it slow. That's why it says it's growing, but the rate of change is slower. So that's something to keep out for. All right, at the top, our restaurants are quickly, maybe too quickly, returning to 2019 sales levels. Strong consumer demand for dining out is clearly evident as COVID-19 restrictions ease, but the challenges are supply chain outages, logistics delays, and employee and management staffing constraints. Some locations cannot open for business or have limited hours, as we cannot staff the restaurant to meet consumer needs. You cannot meet the needs of consumers. Okay, and so this is why I be telling y'all, especially, the Bitcoin lovers and stuff like that. I know they're trying to get everybody hooked on love for digital currency, but it is really nothing. Money's already digital. It doesn't solve anything that already can't be solved. Maybe faster transactions or something crazy, but who gives a shit? You use your card right now. You're not complaining about the speed of swiping your fucking card. So how much more speed do you need? All right. So, but in the real world, you had to survive. You can't eat digital money. You can't do nothing with this digital stuff. So what's important for economic growth is goods and services, real tangible shit. Okay. So anyway, just pay attention, right? So for the next one, severe supply chain disruptions and inflation. Okay. It's in the arts and entertainment and recreation. This next one says deliveries as well as short supply, a lot of materials, shortage of lumber, copper, steel continue, which is driving up prices and lead times. Construction, right? Everything is going up. Okay. Challenges in the supply chain are numerous. Labor market remains tight and wages have risen at an unprecedented rate. And we are expecting a long-term effect on pricing of services. What did I tell you guys months ago? My man Bill Ackman came out. He even told the world. When employers raise wages, they don't take that back. You can't give somebody $20 an hour and say, oh, now I got to drop you back down to $10 an hour. You know, there was an article this week we was talking about in the group, McDonald's paying people, offering here where I'm at, there's a McDonald's that's offering people up to $20 an hour, you know, depending on your years of experience and stuff like that. $20 an hour at McDonald's. And they're trying to get talent. They're having an issue with trying to get people to come to work. They got all the schemes of the world. You know, they give you a COVID shot. They give you a bonus check. Just come and fill out an application. They're trying to do everything they can to get people to show up for work so they can actually, you know, meet the demand of consumers so they can generate profits. And because it's so hard, it's causing the price of things to continue to go up. And so wages go up, they don't go back. That's just permanent. So that's why the whole thing about it being transitory, I just can't see. This is sustained inflation. All right. Okay. So then the next one says, overall business activity in the months has been strong. We are seeing an increased orders and slight improvements in backlogs. The primary headwinds this month continue to be very expensive ocean freight rates, increasing business costs, and increasing raw material costs. The top line is not outrunning expenses. Okay. So their expenses are up because the cost to even transport. I mean, everything is go up. Okay, everything is going up. And anytime you see oil go up, just understand inflation is going up because everything that you order, goods and services that you're ordering, had to be transported to you. Even when you're ordering off of Amazon, somebody got to bring their little cargo van around. They got to put gas in that. Okay, so when that's going up, inflation is there. So it's a, you know, you don't have to be a genius. Just know you look at an oil chart that's going up, inflation going up. That's a simple way to look at it. All right. Starting to see a lot of commodity price increases for chemicals, acidizing and cementing. This is driven by product costs increasing, stemming from low production from plants. Again, same thing over and over again. So we haven't missed anything, guys. We haven't missed anything. We've been on this whole inflationary story since the beginning. I predicted that's what was going to happen. That's what I saw, and we're actually literally living through it right now. All right, what the impending rubber apocalypse means for the U.S. economy. This is what I'm talking about. Raw goods and services. I haven't even checked this out, but I'll make sure to read this. Thanks, Topaz, for dropping that here. And I'm gonna hit that little like button, like how y'all do on Facebook, because on our website, we could do that too. So keep that in mind, you know. We got our own site. That's what we do. You feel me? All right. And Richard Branson reaches space on Virgin Galactic flight. That should be all over the news and Twitter feeds here today. We'll see how SPCE responds to that in the markets this week. Okay. And we'll check out the rest of this when we get back. Let's go to the drawing board here. All right. So Dustin said Bezos is crying. He'll be all right. He's gonna have his day out there. He's supposed to be trying to go further than Richard is. So we'll see. Hopefully none of them die, blow up, and nothing crazy out there. But again, you know, it is what it is. He said JC funded that. Right, JC did, because my mentor JC, he actually is friends with Richard Branson. He hangs out with them, you know, on this island and stuff like that. And anyway, you know, you get all the big boys that come together, you know, which is dope. That's dope. All right. So taking a look at the markets here, we got the ES. Just taking a look at the S&P 500. All right. I got this target here that's been on the map for a minute. JP Morgan's 2021 outlook. They have a 4,400 target here. And I believe that we can get to this target, although we're up against some key resistance right now from this 1618 retracement from here to here. this is a key support, key resistance line as well. But we see the market has this little overflow that it would do, and you don't want to be too hasty with trying to short up here, trying to call the top. And because this target is up here, I mean, we might not hit it, but because it's there, I got reason to believe that we may be able to hit that target before we get a sell-off, okay? We are seeing some signs in the market that's looking crazy. Like I was saying, the bond market's seen that going down. They're forecasting the economy to go down, okay? Second half of the year, we completed the first, half of the year. It was a very strong comeback, okay? From all the way, those gains all the way from there, okay? All the way from the beginning of the year, all right? We started, all the way here. That's good enough profits, okay? Easy to make money in that, but when you get into the chop zone, things get complicated when you get into the chop zone, all right? Let's take a look at the Nasdaq. Nasdaq is also extended. You guys can see it's in overbought territory, of course. It's a stone's throw away from its most recent high. It's so close there, it makes no sense to not blow past this. I do believe that we can blow past this. And the market light hold numbers, I know my 1618 extension is here, but 15,000 is the target, okay? So I believe that we can get to that 15,000 before we get to a sell-off. And the Russell chopping away the whole way through, okay? So this would have been a perfect play to drop an iron condor on. We had people that was asking about iron condors in the chat room. But yeah, this would have been a perfect play for an iron condor this whole time. You would have dropped that on IWM. But it's chopping around here. But what's interesting to me, in fact, let me actually just go to RUT. Looking at the futures. Let's go to the index here. And let's actually, my bad. Go to the weekly. Thinkorswim is thinking. It's taking a little too long to be thinking for me. So we're going to move on to the next. So you can get this thing up. Oh, man. Okay, well, that's interesting that Thinkorswim is thinking so hard here. Okay, so interesting. But there's an interesting development that's on the Russell here, seeing chopping sideways. But on a bigger time frame, what needs to be understood is that on that bigger time frame is that it's squeezing. And the squeeze itself looked like it's got some downward pressure on it. Okay, there we go. Okay, so this is the Dow. Don't know what was going on with that. But here we go. Let's see if we can get that back up. All right, here we go. Oh, okay, so Toss is acting up across. All right, thanks for the heads up, Dustin. Anyway, you can see that squeeze on this weekly chart here. It's real interesting, all right? We can see the formation here. We got the squeeze that's popping off of here. But what's the direction of this going to go? And I'm definitely going to be paying attention to that. If it goes here, then goodbye to the markets. They're going to go down. If it goes up, then that's great. But this squeeze here is definitely moving towards some kind of solid move that's going to be coming. And I believe that move is going to be coming relatively soon because of the squeeze here that's in the Russell. And normally the Russell my experience seeing that the Russell leads the rest of everything else. And Russell goes, then they all follow afterwards. All right. All right. So, and then Ron was coming through with the bonds in the chat room. Okay. We saw the yields. They're going down. Prices of bonds going up. All right. So bonds yields going down. Price of bonds going up. This move up. Bond yields are actually going down like this. We saw that earlier, but it moved up into this key resistance zone right here. All right. And look at the candlestick. Okay. Question is, does it reverse from here? All right. It had a nice little bit up, but it's up against that resistance and it's making itself known that, hey, this is a key resistance level. And so when we see that, reverse, go down and then yields come back up, those are things that we're going to be watching for this week as well. Let's take a look at the dollar here. All right. And then taking a look at the dollar here. We got this double bottom setup that looks like it's taking place here. And you guys can see it. Okay. Bingo. Right there to the 50 coming back up. And it's behaving right there at that 50. Okay. Will it clear this 50? Make it up to the 100? We must see if that's going to take place. Or it stalls out and the dollar goes back to falling. Okay. Again, more things that we're going to see. Long term, I believe the dollar is going to continue to fall. We may get some short term, bid up here, maybe up into the 100 range, but I don't think we'll get past the 200 at all. Like, I just don't see that happening, but we'll see. All right. Gold, on the other hand, let's take a look at gold here. No, I'm on the weekly, but gold coming back up. Let me just go into a daily. Interesting. Had a nice week, actually. This support level held pretty nice. And that's also a nice little double bottoms up in there. And it's up against that 100 moving average. It does have a buy trigger next to it. We'll have to see if gold can come up to at least the 200, which is back to this yellow line that I previously had in the past. So I got reason to believe that gold may come up there, but I don't see no big movements in gold happening just yet, because again, the markets is confused. Markets are confused. Oil. All right, and here's the whole situation with oil. As you can see, oil continues to rise higher, and in the chop up, well, I had to go night. Sometimes you gotta go night, Topaz. Ready to go night. I had to go night. When oil hit that on us, all right, and boom. Okay, I didn't have those Bitcoin, diamond hands. I had them weak pussy ass hands, and I had to get out. Okay. But it held that floor, okay? And then it recovered, and we see it coming back up, okay? So this is what I was saying. I still believe that oil is going to continue to move higher. We got to see it is forming a squeeze here. So we may see it chop around a little bit, but the squeeze is in there. And my 127 extension is at 81. 80 is a whole number. That's good enough for me. I believe that we can get there. I'm sure OPEC and those guys will love that. Okay. And then the Bitcoiners. Yeah. Bitcoin is a very interesting situation here. Just taking a look at this. This could go either way, okay? This could go either way. But Bitcoin price is trading under the 200, okay? This right here, it broke that line, okay? So when that price breaks that line like that, it may chop around up here. But overall, I think it's got some more pain to go. My $20,000 target is still down here. More pain for Bitcoin, I believe. But we'll see. It did pretty decent this week. Actually, was up slightly on the week. But yeah, coin was actually coin had a nice move, Dustin. Yeah, so over here, man, I got the flow jumping right here. You guys will see the flow right there, and we'll talk about that in a second. But I'll take a look at some of those things that you guys want to take a look at. Y'all can drop those in the chat, and then we'll bring the session to a close here real quick. But yeah, like this is, Bitcoin, this could rally up, but because that resistance, those floors, those support levels are now resistance levels, Bitcoin is in trouble, if you ask me. We'll see. Bitcoin is totally unorthodox. Anything can happen. They pumping it like crazy. They got to drop commercials every 5 minutes that you're on YouTube. And so, people continue to adopt it. But again, you got, countries like China that's moving really aggressive against it. The U.S. hasn't showed their hand yet, but trust and believe me, they are not going to be rocking with Bitcoin because they're working on their digital currency so they can control the masses. All right. And so you guys can see over here on my left side, this is what I'm watching throughout the day in my little side panel. And this updates, throughout the day. So we can see, I can see where the flow is at. And you guys, I give you guys the charts for this as well. But I can go in and see what's moving, okay? Where all the crazy action is happening at, pinpoint it. And then I can actually I'll just go and send it over to one of my charts. And, this is where all the movement is at. Let's see here. So yeah, so this is where all the movement is going at. And so this is what I'm in here chopping up in the chat room on a daily basis. When I'm seeing the flow and I'm telling you guys, hey, this is where the flow is at. This is what I'm talking about. When I get into a trade, a position, especially in this choppy market, I'm not playing swings. I'm playing, the day trades, okay? And so in situations like that, I can see them over here. I can see all the movement. And so we calling that type of information out in the chat room. Some of them are swings, but most of them, these are just catching away because the market is super choppy right now. So I'll just show you guys that for a second for that. All right. So I know we're close on time. Let me get what you got here. Ron. WY, all right. Okay. Housing. Oh, okay. I see how you living out here, Ron. Okay, I see how you living. This is a nice chart, okay. Swing high to that low. Catch the support at the 200. Bingo, that looks great. Bingo, got a buy trigger. Got some good volume up in here. Move right up against the resistance, the 50 and the 100 and the 20 and all of that is right here. Price needs to clear that. Once price clear that, I think we can get up to that 618 on that. So you got a couple of dollars. Keep in mind, you got earnings coming up in there. But overall, that chart looks great. Shout out to Ron for that. Okay. Hershey. Okay. You got to get your Hershey chocolate on. You feel me? You got to get your Hershey chocolate on. Looks like we are at a squeeze on this one here, but it is up against that, 127 extension. Could that squeeze pop it through to the 1618, which is about $180 target? I believe that we can. So just keep that in mind that you want to see how it performs up here against this resistance. Okay. If once it breaks through, then you can start looking for that 180 target. But should it not, then you could be in trouble heading into earnings. But I think it looks good. Dustin says he's looking at coin and Logi on the weekly. Let's take a look. Coin had a nice move this week. It did show up in my flow. And yeah. So because it doesn't have much, this just started, we don't have no data for, all the other time frames, but we'll go in a smaller time frame here on this and see what's shaping up. Okay. We'll have to see, how coin continues to perform overall. From when it hit this here, we see that the price is starting to come back some. Okay. And so, Yeah, like I'm interested to see how this is going to play out as well. So it's definitely, if it show up in my flow, I'll definitely look to do some day trades on it. But not nothing long term. But yeah, because I mean, again, you got a lot when the markets are so crazy like this. What you normally see popping, the meme stocks, okay, AMC's and all of that, like, and it'd be crazy. So, coin, all these type of stocks normally be popping. So you can get in, throw some calls on, make some good money, short-term time. All right. And then this here is, Logitech. Okay. Yeah, Logitech, that's the camera that I'm filming on right now. Interesting to see these companies, you get a nice bid up on this here. And a lot of it's from the lockdown of the economy because of COVID and stuff like that. And then there could be some plays that could be, trying to form a scenario here. I can just swing it like this. It could be trying to form a scenario here based off of this COVID Delta variant situation. A lot of speculation on how bad this thing is. You got some people that were unvaccinated that's died, and then you got people that were vaccinated and still died. And, it's starting to see cases of this, Delta variant pick up. And so trades like, Zoom, Logitech, and, Yeti, like the microphone I got here, all of this stuff, because, those plays, they work out, based off of a lockdown economy because people are having to work from home. So companies, or whoever's working, you have to invest in getting cameras for your, your employees and all that, so you can continue to communicate. And so, I think if you have that kind of outlook, then, this could be a good situation for you, should that scenario play out, which we don't want to see that play out now, do we? No, we don't want to see that play out. We want this thing to continue to open up, and we want the economy to get back right, so y'all can go to the, to the beach and enjoy family and all that. But I think that's the story behind the Logitech situation. Again, you got earnings coming up at the end of this month, though. But, those are kind of plays that they move off of that kind of news. Levi. Okay, so got the Levi's popping off. And again, this is like the opposite story of what we just saw in the Logitech situation, because, Levi, these companies with the clothing company, people coming back out in the economy, people having to go back to work. I guess not everybody's going back to work, but I mean, in a building. But I think a lot of companies are trying to get people to go back to work in the building. And so you got people that need to go and get new clothing. We've been chilling in the house for a whole year, eat up all the food. Even myself, I got a little weight on me. You feel me? I think I'm looking kind of swole. So anyway, people getting big, you got to buy some new clothes so you can go back out again. I think this is that kind of play here in Levi. A lot of big volume came after the earnings and everything. That move could be off because it did come up to the 786 resistance level here. So it'll be interesting to see how that plays. You see momentum like it's trying to drop off. Again, this is an earnings situation, so we'll have to see if that continues. What are you talking about? This one here, Dustin, the weekly on this one? Yeah. Okay. Which ones you want me to take a look at? Oh, he said, okay, Logitech, let me see. Let's see what Dustin sees. Okay. On the weekly chart, I mean, yeah, it's moving up. More long term, obviously you see that. You got earnings coming up. You got that nice pop off. It hit that resistance and then it reverting to the mean. It held that mean. It's starting to leap up off of that. But we got to see how it's going to continue to go. We got momentum that's kind of coming down here, but it's a little choppy, so it may chop around. We'll see. But again, I think that overall that this would be a play off of if rumors of the economy having to go back on a lockdown, then if you're positioned in this one, you should benefit from that. Okay. If this virus thing is coming out, nobody knows how it's going to play, so I can't tell you if it's right or wrong. All you just need to know is that what your story is, what you're getting behind, what the technicals are, the fundamentals, and the story. You always got to have a story And so that story will pump up these kind of stocks if, market participants feared that we had to go back in a lockdown state, and companies abandon this idea of people having to go back to work, or they're going to need to get more Logitech cameras for their employees and stuff like that. Okay. All right. What else y'all got? Y'all got anything else? You good? Asian stocks because they are getting smashed. Yeah, good thing that Dustin talking about the Asian stocks getting smashed. And it was crazy because, the Asian companies, they're going to do what they do. But China's actually going through some situations right now where their government is doing a big crackdown on these tech companies. And in particular, there's some American companies doing business over there, but China, the same fears that we have. You had Trump talking about the Chinese taking our data and stuff. The same situation we have with the Tencent situation. Well, China's doing the same thing. Like, American companies trying to get data on our people and stuff like that. China is real inclusive, bro. Like, you can't even trust the data they put out because they don't participate in, letting these other countries trying to know what they really got going on. So, yeah, like it's interesting. Dustin says long term, they will most likely rebound. Yeah, long term, they will eventually rebound. But right now, just appreciate the depreciation of the prices here, because then you can get in these great companies at a low price. But you need to let the heat go down. You got to lay low, like we say in the hood. When the 12 is on you, you hot. You a hot boy. You need to lay low, let the heat come off you. So you want the heat to come down off of these here, but, take your targets on these things here, especially a company like Baba. Like this definitely needs to hold this 200. Should it break the 200, then, even better pricing. It's crazy. But yeah, communist China, different thing over there. You want to be on their good side, because if not, you're going to be done. Yeah. Okay. And then, okay, DraftKings. Oops, wrong one. All right. Yeah, on the weekly chart, definitely not looking good. Yeah, you can see that come up here, that resistance, and look at it starting to die down here. Yeah, short. Yeah, I like that. What Topaz said, short that. Yeah, you can see those key moving average all up above that, how it constantly got rejected. It's coming up against, this resistance. It's got to make it through. If it don't, it's going to just, get rejected. So, yeah. That's doesn't look too good. I think that we can probably look at sectors for plays this week coming in, like consumer staples. Consumer staples is looking, a little better than some of the other ones. We got this established resistance, established support down here. We got a buy trigger that's right there. Price is above all the other moving averages right here. You see that little price poking out above. All right, that gives a little insight. We got a little trend movement up. So we could get some plays in the consumer staples sector, also in the industrials as well. Industrials actually, looking a little better as well. Get some of those defense stocks and everything. We'll see how those all play out. Trend is up. Got a little squeeze that's sitting there. Price is above the moving averages. Key resistance is the 618, so definitely want to watch it up against that. But I think we can see some plays in these sectors. So I look forward to looking into those for some moves here. But yeah, we definitely reached time here, gang. But I appreciate you guys showing up and showing out this week. Tell a friend to follow us at Wallstreet Jackboyz. And I see you guys on the website and in the chat room the rest of the week. Y'all have a good night, gang. Peace.